Here is a collection of just some of the many stocks that we've talked about recently that seem to have consistent swing trading opportunities. First up is DWAC. I just took profits on DWAC a second time recently by buying it under $13 per share and then selling it over $13 per share, which it seems to be doing lately. Secondly is SOFI. I just bought it under 5 and then sold it over 5. Then I bought it under $5 per share again, and now it's already up over $5 per share a second time. The CPI data tomorrow morning could change the direction of a lot of these stocks. At $5.50 per share, the $5.50 call for this week and the $5.50 put for this week are both $14 per contract for SOFI. If you bought a number of those calls and SOFI went up 50 cents per share, every $14 contract would be worth $50, just like if you bought the puts and it went down 50 cents per share, you would get $50 per $14 put option instead. Interestingly, if you bought one call and one put, you would have $28 invested, and whether it went up or down 50 cents per share, you would get $50 back, which is more profit than loss. Either of those approaches are gambling, although they are low risk, high reward, which can be nice for small account building. Ultimately, buying long-term calls of SOFI is probably what's best. Rumble, I have swing traded a number of times, twice recently. I usually buy it at $7 or $8 per share and then sell it at $9 or $10 per share. With its earnings later this month and the CPI tomorrow, there could be more opportunities to take advantage of this consistent pattern soon, and I also like it because I feel safe holding it long term because of its higher potential later. Ford, I have many times bought around 12 or below and then sold at around $12 per share or higher. Sometimes the goalposts will move with Ford, especially with AMD. AMD has offered us several opportunities for swing trading, but sometimes the exact buy point and sell point will change, so you have to adapt as you follow it. Keep in mind these patterns do not last forever. PayPal is the perfect example of that. PayPal had numerous opportunities to buy around 72 and then sell around 74 per share, but then recently it just tanked. But if you believe in the stock, you can sometimes just chase it. For example, with Chewy, after its patterns broke and it went to new lows, I just kept averaging down until it turned around for me.